Hey guys, welcome back. I hope you had a really great day trading today. So today was Monday, March 3rd, and we have entered a new level of trading. VIX is holding above 20, and it's really easy to make money when VIX is low, when all the moving averages are in order. But when VIX is elevated for a long period of time, when you have 1.5% to 2% swings daily, if you're new, you might get lucky. But if you don't have a strong strategy and solid risk management, you'll get burned. So for anyone that's followed me for a long time, you know I love VIX at 25, but it is not for the faint of heart. So today is the first day of March and we opened right here. And let's go back just a little bit. We closed right here at the 4-hour 200 moving average on Friday. And today we opened with a pop up to the 50-day moving average and then got rejected back down. And for half the day, we stayed right in the middle near the 4-hour 200 moving average, being held up by the 35 EMA, but then we dropped in the second half of the day and it was a huge drop. The bottom of the implied move was 588. And we broke underneath that. Right after that, we broke underneath 586, which is the bottom of tomorrow's implied move, and we dropped it all the way down to, and this is something I did that's new on last night's charts on TradingView. Right here is the implied move for the entire week. So we dropped all the way down to the bottom of the implied move for Friday's contract at 581. So underneath previous support where we closed that gap out and almost down to the 35 EMA on the weekly time frame. I will zoom out to that in just a minute because that's extremely significant, but absolutely massive move today. Honestly, I was way off. I thought we were going to have a flat day today and I was so wrong. So SPX, let's take a look at that. Same thing over here. We opened with a pop up to the 50-day moving average, got rejected, came back down underneath the 4-hour 200 moving average, got caught by the 35 EMA for the first half of the day, and then we dropped out. We took it all the way down to the bottom of the implied move for Friday's contract and just short of the 35 EMA. So let me take this to the weekly time frame. This 35 EMA right here is extremely significant. It is a level that has been defining the uptrend for a very long time here. 35 EMA, ever since we got back above it right here, we have been bouncing on that level, taking it higher, making new highs. You could see right here, the last time I brought this level up was right here. And I said that if we do break underneath it, because if we print a red candle, then you can expect the 35 EMA to be resistance. But right now we're still above it. We still have a blue candle, but we are getting very close to that level and we have a red signal line. So something to be aware of. We closed literally just a little bit above that. So because we closed above the 35 EMA, we are still in a bullish uptrend on the weekly time frame. If we get underneath it, that's when you'll start seeing the real selling volume. All right, so let's take it back to the 30-minute time frame here. And SPY did close down today, 1.75%. SPX down 1.76%. VIX popped 16%. We are at 22, almost 23 right here. And we did not close within the implied move today. All right, and then taking it over to QQQ. We opened here up as well, and then we took it to the 4-hour 200 moving average, and we got smacked back down, 35 EMA. We tried to hold that level, but we lost it, and we dropped out all the way down to the bottom of the implied move on Friday's contract, 494. Now the 35 EMA is right here. You could see that we bounced there on Friday. We broke underneath it today. So let me take it to the 5-year time frame. This is the weekly candle, and the 35 EMA is right here. And you could see very, very clearly that it has defined the uptrend ever since right here. This is our first blue candle right here. That is in February of 2023. This level is no joke. Every time we came back to it, that is where we saw support and moved higher. But right here where we printed our first red candle, you could see that once that 35 EMA, it was resistance here and then here until it brought us back down to the 200-week moving average. So as of right now, we are right here. Let me zoom in just a little bit. We are literally sitting on top of the 35 EMA. If we get underneath it, people are going to start taking long-term profits here. So as of right now, we are still above it. All right, so let's go back to the 30-minute time frame here. And I think I said everything I needed to say here. We popped up to that 4-hour 200 moving average right here, and we got pushed back down, all the way down to the bottom of the implied move on Friday's contract. This is a new thing that I might start doing on the weekend. When I do the weekend video, I'll take a reading of the implied move for the entire week. I don't want to overclutter these charts, but I think that could be a useful level, and it's interesting that we took it all the way down. And here again, you could see this 35 EMA. Now this is on the 30-minute time frame. Once we got that death cross right here, 35 EMA crossed underneath the 30-minute 200 moving average, and it's been a solid resistance. Yeah, I definitely thought we were going to get above this today, but it held as resistance and we did get pushed down even lower. Crazy way to start the week. Big down day, down 2.19%. VXN up 10.15%, and we did not close within the implied move here. And IWM, we did open here with a small move up, tried to break away from that 35 EMA. You could see the candles that are around the 35 EMA actually print gray. So the blue candles are above it, right around the 35 EMA, they're always gray. And then if we do break above this channel here, then you'll see a blue candle. But there was a fight here to get above the 35 EMA, and we could not get above it, got pulled back down, and here as well took it all the way to the bottom of the implied move, 208, and that's where we finally saw a little curl up at the end of the day. So we're still within the implied move for the week, but we did not close within the implied move for the day. And IWM did close down 2.73%, RVX up 10.24%, and we did not close within the implied move. So across the board, volatility is in the 20s, the mid-20s. Absolutely my favorite level, but it is chaotic and it is wild. So this is a really great time to remind yourself of your risk management, of your rules, so you don't break your rules when you start trading this. All right, and then lastly, we have DIA. This chart looks absolutely insane. And not only do we have a bunch of different momentums, we have a little bit of up, a little bit of down, starting to look like more down here, but we do have a really interesting megaphone pattern here. Right here, we are making higher highs and lower lows, and we'll see which way this breaks out. We did close today right on top of this next support gap, and let me actually just go ahead and start at the beginning here. We did open today with a pop up into this down gap, this resistance level right here, and this 30-minute 200 moving average smacked us out and took us right into this battle zone of moving averages. So let me fix this 35 EMA, and really none of these levels offered any support, and 4-hour 200 moving average was even facing upward, and that time frame failed and we dropped below all the way down to the bottom of the implied move for the week, 430. Remember, the bottom of the implied move is a level, and especially in DIA because it has only weekly contracts. So 430 is a level. It lined right up with this gap, and we did see a turnaround right there. So just underneath this gap here, you could see this 35 EMA creeping in. That is on the weekly time frame. And take it over to the weekly time frame just to take a look. I don't think I've seen this today at least. So you could see that 35 EMA. We're still above it. We do have a red signal line on this time frame, but if we do print a red candle, this is where you're going to see the long-term profit taking, and then possibly a return back to the 200-week moving average. So definitely this is a time to be cautious. There's a lot of changes happening in financial policy and the markets are trying to adjust, but focus on what the charts are saying. And of course, with day trading, VIX does a lot of those adjustments for us, so in terms of range expansion. But I think I've talked enough today. Still getting over this cold, and my voice is telling me it is time to wrap it up. So have fun tomorrow, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow night.